Hi, everyone. I hope you're having a wonderful week so far. We have the latest episode of the Inside Crypto Show, interviews and discussion with regular people just like yourselves. Today, we're joined by Gurjeet Kundi, who's the managing director and head of trading at 21Co. He joined the company last year with over 2 decades of experience in the ETF industry, including 2 years as the head of cross-asset ETF trading at Mizuho. I hope I'm pronouncing that right. Before we get started, let's hear a little bit about his background so we can understand where he's coming from. Gurjeet, thank you for making time today. Tell us a little bit about yourself.
Hi, Cryan. Thanks. Yep, I've actually been working in traditional finance for the last 20 years or over 20 years. And after graduating from the London School of Economics, I actually managed to get my first trading role in Germany, Munich, for Hypervereinsbank. And that's where I actually started in ETFs. This was a brand new desk in Europe, and we had an opportunity to really just start building a ETF market making desk and trading desk from scratch. And that opportunity really forces you to learn your own skills, your own experience, and pull together as a team. I was fortunate enough to work in Munich for 5 years, and then I was invited back to London. This was after a merger with UniCredit and Hypervereinsbank to work in a proprietary trading team. And from there, for another 4 years, I helped build out a high-frequency trading business and a Delta One arbitrage business. And then from there, once again, I was very fortunate to be invited to work at Deutsche Bank to build out a similar proprietary trading business. And then during that tenure at Deutsche Bank, there was an opportunity to grow the ETF market making desk. And just given I already had that background, it was a very kind of obvious opportunity to go and build a desk. Similarly, there were certain changes and structural changes, which meant that there was a merger between the ETF market making desk and the Delta One trading desk, a synthetic equity index desk. And so my experience has been wrapped around ETFs and Delta One, and I've been very fortunate to build desks, market-making businesses, and grow very strong teams with a global nature. And then from there, after another 6 years at Deutsche, I moved on to Merrill Lynch, where I continued to grow not just the equity Delta One and ETF business, but had a great chance to work with a fixed income division and grow fixed income ETFs. And thereafter that, we got to the most recent TradFi role that I had, which was at Mizuho. And that was a great opportunity. Having worked across a number of different firms, from a European firm to large US firms and firms with a strong Asian culture. And it was just a great opportunity to work there. However, throughout that whole time, being a trader in the financial world, I've always had a kind of interest in technology. And so I've been following crypto for many years, and the opportunity to work at 21Co, it seemed like a once in a lifetime opportunity. It kind of matched my skill set and my interest in crypto. And so far, it's been a great journey working with such a high caliber team.
Nice. And you just answered my question. Like, okay, let's take a step back a bit. Like you mentioned, you've always followed technology. That's the same thing that got me into crypto as well. Like, what was that first memory or news article or someone told you something that said, hey, I should look into this stuff? If you can tell us that story.
Yeah, as a kid, I'd always deconstruct a lot of my toys, unfortunately. And I always like to just understand what's going on behind the scenes. I never managed to repair them. However, it was a similar thing with PCs, laptops, and once it came to crypto, it was just what's going on here. I really just wanted to understand what's going on behind the scenes, what's driving the price of Bitcoin, what does blockchain actually mean? And as you start reading into it, what I found was if you start moving away from the pricing action and what decentralized finance can do, what the blockchain is capable of, trying to bank unbanked people around the world, it just sounds like something that could have a great benefit to individuals across the world.
And I totally agree with that, especially like me originally coming from South Africa with a 24% unemployment rate, somewhere around that line, with loads of people not having access to banking. So I definitely agree. Gurjeet, there's something that you do, but before we get into that, I want to remind everybody, like anything that you and I say does not constitute financial advice. Please do your own research. It's just our opinion, not connected to 21Co or 21 Shares. You've started posting these weekly trading memos, which are really, really informative. I think everyone's a big fan of them. We just posted one literally 3 hours ago, so we just changed the script for today's show a little bit, but it's cool, it's awesome, it's pertinent, especially this episode is going to come out relatively soon, I think within a week or so, if not that. So you mentioned something in that memo that I thought was really cool, especially I live in Taiwan right, which is right on the border of China, and China's been all over in the news. 45 days ago, they were still locked down, COVID issues, and they've now opened up. Chinese New Year is next week here in Taiwan, and in China, it's actually a much longer holiday. And something on the memo really perked my ears, but I wonder if you could tell our audience a little bit about that, is that you said China opening up more and Chinese New Year could cause inflation to go up. Do you want to explain why you think that is?
Yeah, definitely. I think the sort of narrative around China opening up is not a new one. I think the market participants have been expecting this for a long time, and it has been delayed. However, China is definitely one of the largest buyers of commodities in the world. And during the lockdown, I believe that demand has been slightly lower than what it would normally be. And I think as they continue to open up, we're definitely going to see some impact across commodities, across the whole range. But even from the housing market perspective, they've seen new home sales drop by over 25%. And that was over the first 10 months of 2022. But even that could start rebounding. So as you see demand coming back across the whole space, there definitely could be an impact on inflation. China's economic growth is estimated to be around 4.9% for 2023. China opening up is a very good thing. At the same time, there will certainly be some impact on inflation from a commodities perspective.
Okay. And do you want to explain the impact from the commodities perspective? Because I think part of the thing I was actually going to ask you earlier is, as the head of trading, right? I think everyone, they understand the word trading, right? But as the head of trading in a bank or a crypto company, what is your function and how does that relate to what you just talked about?
So as demand goes up for various assets, for me as a trader, I need to understand how various risk assets are linked or the correlation between them. And as commodities go up, whether it's oil or gold, it does have a knock-on effect on the manufacturing process and output of various products. So you could see the supply chain, as much as it would open up with China, the prices of various commodities going up can increase manufacturing costs, which are likely to be passed on to retail over time. And myself as a trader, I'd be monitoring this. And the question is, from a trading perspective, would you need to hedge it, or would you want to take a position ahead of that and try and benefit? However, I think in this particular case, there's still a lot of uncertainty just across geopolitics, macro, and just being aware of such impact is quite important as a trader.
That totally makes sense. And let's bring this a little bit closer to home. You mentioned something also really cool, which is liquid staking. And again, everyone knows about Ethereum, staking Ethereum on Lido, for example. We've talked about this in the podcast numerous times, so I want to explain this again. You mentioned that liquid staking is doing really well. And the thing I wanted to ask is, probably a lot of people like, how is liquid staking doing really well when the entire crypto market is down? And why is it doing really well? Is it new Ethereum holders saying, hey, I heard this thing called liquid staking. I can stake here and still have STF and do something with that. Like, what's happening there?
Yeah, absolutely. Liquid staking, as you mentioned, the bull run continues with platforms such as Rocket Pool, Lido, Frax, and even Stride. And one of the great things about liquid staking is during a bear market, it's actually a real opportunity to earn passive income. And I think that's one of the key things. And what I would say is, if we take a step back, with the Ethereum merge, which happened last year, I think that was a bit of a game changer for that particular token. This year, Ethereum will go through its Shanghai upgrade. I think it's targeted for March, and that will release Ethereum staked on the Beacon chain. And basically, industry analysts believe this will be good news for liquid staking protocols, as basically they offer better incentives and yields. As opposed to direct staking, they provide a more flexible way to stake and earn without having to lock up collateral.
That's very true. Like when I got into crypto, I staked my Ethereum in Binance's staking contract 2.0. Oh, cool. This is cool. And then years later, it's still staked and I can't have access to it. I only learned about Lido a year or 2 years ago. So I'm looking forward to that. Another thing you mentioned, and I want to be very conscious of your time as well, is Genesis. And Genesis has been all over the news as well. You mentioned the Gemini exchange and the Winklevoss and their letter about Genesis. And how is that situation playing out? How do you think it's going to play out? Will they eventually pay back creditors somehow?
Yeah, look, it's a great question. And to answer that, I do need to start from the beginning, which is Genesis itself has been a great business and very profitable. Unfortunately, as part of the fallout from FTX, they were amongst the casualties. Genesis itself, and this is from a Financial Times, they owe creditors more than $3 billion. I think 900 million to Gemini, 280 million to a Dutch exchange. And it's certainly a good and profitable business, but once again, they were one of the casualties from the contagion from FTX. And once again, Genesis comes under the parent company DCG, and basically to survive and not suffer significant hiccups, they need to raise more capital to save Genesis. And if Genesis can reach a deal, it will have some repairs to do, but potentially can keep its doors open, which I think would be very positive for the crypto industry.
I've seen narratives in the media about, like they talked about the days of free money years ago, and now there is still money available. I've seen people from various funds, but it's much harder to get. Do you think anyone's willing to bet on Genesis at the moment?
Yeah, I think, look, the venture capital funds, other creditors who do understand the crypto space could certainly understand that Genesis, they do have a very good model and it is a great business. It's just unfortunate that last year was a pretty tough market in crypto. You had the Luna fallout, then it took 5 months, and then the further FTX saga. So certainly some investors in crypto may have had their fingers burnt. It's actually during the bear markets when you start to see the opportunities, which can be quite lucrative and fruitful during a bull market. And I think the investors who manage to do their due diligence, spot the good businesses, and are willing to take the risk could fare very well as the bull market returns.
Good point. You mentioned a bull market. That's all one of the things towards the end of this memo, which I thought was really cool. You always make the bull, the neutral, the bear case, which is usually in a lot of social media. You always only see the bull case. You might have some people who mention a bear case, but you never see a neutral case. And I love the way that is structured. So I want to talk a little bit about that towards the end of today's show. In the bull case, right, people listening to me are like, huh? This doesn't sound very positive. But after I thought about it for a second, I'm like, it actually is kind of positive. You mentioned you've seen more layoffs. Coinbase recently announced layoffs as well. You said layoffs are actually like a bull case because they will reduce the impact of inflation because people aren't working, they're going to be spending less. Why do you think that is a good case? And is this a bull case, like a 12-month bull case, or how does this going to play out over the next year or so?
Yeah, layoffs themselves are very painful for individuals, and it's never an easy topic to discuss. However, central banks around the world have been battling with inflation, and one of the tools at their disposal, monetary policy, they've been using interest rates to try and bring down inflation and taper off demand. And there are talks about, are we in a recession? Are we going into a recession? And one of the signals that you are heading into a recession is rising unemployment. And unfortunately, we are seeing those headlines. However, as there are more layoffs, you will see a reduction in demand, contraction in spending. And once again, as sensitive as that topic is, it could potentially have an impact in lowering inflation. So from that perspective, there is a chance to push further down inflation, which may in turn cause central banks to start tapering off their interest rate increases.
And once central banks start to do that, I saw another line again in the news was saying it's like it takes 3 to 6 months. And I think this is about the American system. So I'm not sure if this is the same globally, but it says like when a central bank says, okay, we're lowering interest rates. And the article said from that point, it takes 3 to 6 months to actually get into the system and have an impact. If central banks start to lower interest rates this year, regular people aren't going to see an impact for another 2 quarters, if I'm not mistaken.
No, you're absolutely right. Look, even if you look at the CPI number that came out this week, it was in line. It's fallen from its highs of, I think it was just above 9%. However, as much as that top line number is falling, people going to the supermarket buying eggs are not seeing that translate immediately. And as you mentioned, there is a delay and it will take time. But the question is, how do central banks tackle inflation without creating a hard landing? And I think the target is to create a softer landing, but that will all depend on the macroeconomics and geopolitics.
Moving on, one of the cool things you mentioned as well was, like you said, you mentioned new narratives continue to fuel rallies. And I guess the first thing that came to mind to me was Solana and Bonk, the world's craziest name per token. I assume this is what you're talking about, but is there any other examples you want to give our listeners today?
Absolutely. If we come back to NFTs, non-fungible tokens, they could potentially become a go-to method for tokenizing a brand's IP. We've seen headlines about Web3 applications and even potentially some games that become genuinely popular. I think that could all have a tailwind effect on crypto itself. Okay. So key thing here is about sort of user adoption. Will traditional institutions come into the space? But I think these types of narratives, including artificial intelligence, could certainly have some positive effects, not just on crypto value, but just blockchain in general.
Gurjeet, getting towards the end of today's show, one of the last questions I had was, like, you mentioned as part of the bear case is like extra scrutiny in crypto is something that's probably going to happen, especially after 2022. But you mentioned this is part of a bear case. And I always assumed, and again, you're definitely more knowledgeable than me, that the extra scrutiny would bring a bit of confidence back to retail consumers and say, hey, this is regulated, there are laws that protect me in the States. Maybe there's this law, there's MiCA in the EU, right? Why is extra scrutiny bad for crypto?
I think we need to look at it on various timeframes. And I think as regulation is discussed, unfortunately, I think the initial knee-jerk reaction will be negative, but that's in the short term. Maybe they start to overregulate it very early on, or even just the headlines may refer to overregulation of the crypto markets. However, I believe globally, as the risk and regulation framework starts getting pulled together, in the longer term, it will create a robust framework for crypto to thrive.
Yes, I like that. Gurjeet, you've got to hop to another meeting soon. I just want to say, is there anything else you want to mention for our listeners, for our viewers? And I also have to ask, are you on social media? Is there any way for people to follow you?
Yeah, so I think in terms of following me, well, we can start looking at the best way to get that memo out there and potentially continue doing these podcasts. It's been very enjoyable today. And final thoughts are coming back to a point that I mentioned earlier, just trying to look at crypto from a price movement perspective. It doesn't do it justice in terms of the value it could add to the world. As you mentioned, you come from South Africa where there's very high unemployment. It doesn't mean that there's not good talent out there. And someone who's got great content in a remote part of the world who just cannot get access to an account could use crypto as a way of pushing out their content, but also being compensated for that. And I think that's going to be a game changer.
Definitely, I totally agree. And that is a wonderful way to end off today's podcast time. Nice, short, filled with so much information. Gurjeet, I really appreciate your time. And yep, I will have all the information down and I will talk to Comms and see if we can put that memo actually in the show notes for the YouTube video and the podcast as well. And hopefully we can do this again in another quarter.
Awesome, Graham. I really look forward to it. Thank you so much.
Thank you too.